We are about to talk taxes, legal deductions that might surprise you, perks for side hustlers and entrepreneurs, and big changes are here that you literally cannot afford to overlook as an individual and as an entrepreneur. I called up a licensed tax specialist to let you know from an actual expert what benefits, deductions, and best practices you need to consider. This is someone that worked for the IRS for 8 years, then tax compliance in corporate America, and she now owns her own firm, Coleman Tax. So get ready because this combo is juicy. This is Millennial Money in Business. We share the tools to help you escape your 9 to 5 with confidence every Monday, Wednesday, and Friday. So do me a favor, hit like and subscribe. It tells the algorithm to show our video to more people, and it gets us that much closer to becoming the first woman-led business channel with more than 1 million subscribers. Now, I know you've either been thinking about launching that side hustle or you're already in motion building that business, in which case, congratulations. We are approaching this conversation about taxes from an entrepreneur's perspective. Now, real quick, hop in the comment section and let me know what stage you're at in your own entrepreneurial journey. A handful of commenters will get free lifetime access to my private life coaching group, CEO Society. And you know we always try and make education a little more exciting, so we're gonna play a game. Here's how this is gonna work. Each question I ask is either gonna be worth 5 or 10 points, but we're on an honor system, so... And let me cover my back. Now, while she is a licensed tax specialist, I have to stress she isn't giving you specific tax advice. For personalized advice, you need to speak with a tax professional yourself. This conversation is meant to give you a little glimpse into things you need to keep in mind year-round as a small business owner or side hustlers. Let's go. Up first, who needs to pay taxes on their side hustle or business? People making $400, $4,000, or $40,000. If you said $400, you just got 5 points.
5 points. You just got 5 points.
Yeah, that actually works this time, Sylvia. Good job.
Woo.
The magic number is $400. File a tax return. However, and this is where I met a young lady in the same, actually the same question. You got to remember, it's not about the money you made. You get to take expenses, right? The money. Let's say you made $0, but you spent $2,000. You can take the $2,000 as a loss from your business that is deducted from any other income you may have. I don't know if you're still working full time, you can take it against that income, or if you're not, you can carry forward that loss, right? So maybe next year you make $5,000, but you lost $2,000 last year. But we can deduct that $5,000 from next year by the $2,000 that we lost before. So you still want to file.
Next question, what do you need to track for your taxes? Deductible business expenses, cash transactions, or everything? Hit it!
Okay, so I would say, and I know this is going to be not what you guys want to hear, but everything when it comes to accounting and tax, there is a presumption that you will be tracking everything. Now, we get it, things happen and things get lost. And so, while in general there's a rule that everything needs to be contemporaneously kept. So let's say you go and you buy inventory, for you to keep that invoice. It would be nice if you made a note on the invoice or maybe created an internal memo as to what it was for, who the vendor was, and all of that, and how it relates to your business. And electronically keep that. I would never advise to keep paper at all. It's just not feasible in today's world, and it's just too much paper to keep track in the business anyway. So snap a picture of it, but I would say track everything. And there are lots of apps for you to keep track of that stuff now. So I'm just going to assume that we're all are very tech savvy and that, we have smartphones and we have maybe a Google Drive or Dropbox. I would say, you're buying stuff and you're using your credit card or a debit card or whatever online and they're emailing you back invoices, go ahead and move that email with that invoice right over to that receipts folder to keep track of that. Or if you're out and about on the town and you're buying supplies and stuff, there are apps like QuickBooks has an app, and I know there's Xero and Sage. Those are really, really low-cost accounting systems where you can just take out your phone, snap a picture of that invoice, make a note of what it was for, and it's done.
If you said everything, give yourself 5 points. And to reiterate, paper and electronic receipts are just fine. You just need to make sure you're keeping track some way, somehow.
The IRS does not care how you keep it and what form it's kept in. It's just that if you are ever asked, hey, show me the source document for this purchase, as long as you can show that to them, they're fine. You can write it on a napkin and have the vendor sign it and date it if you want and take a picture of that. That's your receipt. As long as you have it and that's your contemporaneous substantiating document, that is all fair game in an IRS audit.
Now to the fun stuff, deductions. What can you deduct for your business? Startup expenses, ongoing expenses, or essential expenses? If you said all of the above, you got 10 points. Because I kind of tricked you on that one, so I'm going to throw a little extra your way if you got it. Now listen real close to this answer because she's about to drop some major keys.
Okay, so this is very, very broadly, right? In the IRS tax code, it's code section 162. Not that I ever want you to go read the code because there are other better publications out there, but code section 162 it states that you can deduct any expense you incur in your business that is ordinary and necessary. And that's a fact and circumstances determination there. So every expense, ordinary and necessary, is going to be obviously different for every industry. So for example, for the beauty and wellness industry, from my tax professional perspective, if you say to me, okay, I'm going to go buy this wig, this unit, I'm going to wear this to this networking event where I want to, commingle and meet, vendors of wigs and hair distribution or something like that, right? In my mind, that's ordinary and necessary because that is enabling you to network more effectively. You're not saying I'm going to go wear this wig to the club tonight so I can look good. Or let's say and let me flip this. Let's say you do wear to the club tonight, but for purposes of meeting other women to sell that very unit. Right? Mm-hmm. That's an ordinary and necessary business expense, enabling you to sell merchandise that you sell. Now, what I would say is, how do you now support that in your business and for that to be sufficient if you're audited and questioned on it? And I would literally just keep notes of that. Like when you're business planning, you're going to have some notes or memos or planner somewhere to say, hey, going to, Club XYZ, I'm going to wear, for purposes of networking with women to sell, that's called the wig Angela. And you wore Angela that night. You're going to sell Angela because we're going to see it and we're going to like it. That was an ordinary and necessary business expense. Versus like me, I'm a CPA. If I go by Angela, I can't say, well, I'm going to deduct this on my business tax because I wore it to go network with some other people. With some other people. They're going to say, well, CPAs don't ordinarily do that. But, business and wellness professionals like yourself and your audience, you all do that. So I would just make sure you substantiate and note and document those things. And any reasonable agent will say, okay, yeah, that makes sense. Like, for instance, when you go to, I don't know if you've ever been to, like, the Bronner Brothers hair show in Atlanta. When people go there, the professionals that exhibit, they are wearing their product, their makeup, the hair that they just did, or the hair that they're selling. They're wearing that stuff so that people can, approach them and they can demonstrate how beautiful it looks and how well the product is. That's all ordinary necessary. So when you're thinking about a specific thing, whether it's hair, makeup, jewelry, whatever it is, you know your intent, right? Mm-hmm. And so I would say just know your intent and adequately document it. Real time, in a plan, not even nothing fancy, in your planner, and that should be, enough.
You heard that? My hair and makeup tax deductible for me as a beauty professional and the face of my brand. Now, I don't want to see y'all out there like Lambo, clout, business expense, or Coachella, networking, business expense. Like, if that is totally typical in your field, then yeah, I guess seek advice from a professional, but you probably don't need a Lamborghini to sell your custom scrunchies. 20 points on the board. How you doing? Let me know if you like this format. We're always trying to make business fun because it is. It's my favorite thing. But I know just the thought of taxes gives some people a cold shiver down the spine. So hit like if you appreciate what we're trying to do here so the YouTube algorithm will show this video to the people that need to see it. Next question. So you mean to tell me this desk, the camera capturing all of this display is tax deductible? Yes or no? Yes, 5 points, but there is a caveat.
Let's say you are thinking about, what you do day in and day out for your business, and you're saying, okay, what do I need? And if makeup and, whatever else is what you need to do your job, which is producing content, being on video, those are job supplies, and job supplies are deductible. Now, if you get an agent that really digs into your accounting records, they would have to dig to see a line item that says makeup, and then you would have to explain that to him or her. You have to explain that to the agent. Now, what I will say, it is tax deductible because it's a job supply. It's something that you use to do your job, which a part of that job is producing content, being on video, and meeting people. But I will say that what they'll try to do is they'll try to limit it. So they won't disallow it or let you not take it completely. What they'll say is, well, and I'm just quoting an agent here, they'll say, well, when you stop live streaming, you're still wearing the makeup, and you may go out somewhere, you may go to Starbucks, you know what I'm saying? They'll get that petty. They will get that petty to be like, well, you went to Starbucks and, get with your friend and you still got the makeup on. So they may limit it, right? They may say, okay, I'll give you 50% of that. And you say, fine. It's better than nothing. But that's totally different, though. If you went, like our previous example, when you were wearing Angela, now if you go to the club and you in the club from 10 to 2 a.m. and then you went home, that's the whole entire night. That was like a work shift. And so that is everything. Now, I hope you never get audited, but if you do, I hope you don't get an agent that petty.
Now, to be clear, when she mentions an agent, she's talking about worst case scenario, getting audited. And she is an expert in this field because she was the one doing the auditing when she worked for the IRS. So you normally aren't going to have to answer to every last purchase and item claimed, but the reason you are supposed to keep track of everything for years is in case you ever get audited, in which case those receipts And notes on napkins and in your planner are what will help you to come out of that audit victorious. So, audits, I don't want to dwell on the negative or super scary, but it is always a possibility. So, what is the one category of businesses most likely to get an audit? No multiple choice this time. This one is worth 10 because I'm not giving you the answers. Cash businesses.
Okay, so I'm going to say this, and I'm going to say this from the perspective of a former IRS agent, not the official statement from the IRS.
Okay.
I'm going to cover my butt there for a second. But there is an internal just red flag against cash-intensive businesses, right? So just you could think of, and that's all just their perspective, right? They think if the average consumer off the street goes to a store to buy this type of product, or a salon or a barber, or most establishments in the beauty and wellness industry, they're going to just think cash intensive. And when you have so much cash flowing around, it's really easy not to track it all, right? So if it doesn't hit like a bank or something like that, there's no way to track it. So then the IRS has to, do a lot more work on their end to try to figure out what income was actually made versus what was reported. So I would say the first, and I think that happens, it could happen maliciously, right? It could be the intent of the business owner to say, okay, I'm not reporting this money that I just got in cash, or it could just be inadvertent. They didn't mean to do that, or maybe they just don't have certain accounting controls in place to track every single penny like the IRS would expect them to. So the first mistake I see small business owners make is just their record keeping, their accounting system, the tracking of all the income and expenses for their business. It was a lot of times where I started audits and I would look at the income and I would look at the expenses, and I'm interested in knowing, okay, you just started this year, so I can see that you made a loss because you're just starting. But if you've been in business for a little bit now, and you're still running a loss after a number of years, then I'm kind of getting skeptical, like,
That is why your record keeping needs to be on point, sis. Now to the big changes in tax law that have been implemented over the last 1 to 2 years. She's literally about to list like 20 changes, and they're all worth paying attention to, but I don't know how to phrase it into a question for this game, so let me just give you the game for this one. Big changes, listen up.
And the reason why, so the new tax law, it heavily affected corporate and individuals, but it more so affected individuals. And I have to lump in individuals with small business, because most small businesses are LLC, single member LLC,
Right.
Partnership, S corps, and they just pass right through to the individual anyway, right?
Mm-hmm.
So we got to look at it all holistically. So for individuals, the standard deduction has changed. It nearly doubled for every filing status. Personal exemptions, they went away. From a Schedule A perspective, the itemized deduction schedule, state and local income taxes, they're capped at $10,000 now. Mortgage interest, you can only take interest up to a mortgage of $750K. What else? As far as if you have children, the child tax credit, it doubled. It went from $1,000 to $2,000. Then there's a new other dependent deduction. It's $500 in case you're taking care of, some unemployed cousin that sleeps on your couch. A lot has changed, specifically from a small business perspective. And I love this deduction. It's called the QBI. It's Section 199A. It's called the Qualified Business Income Deduction. And so because Congress, they decreased the tax rate for corporations, they said, okay, we got to do something for small business too. So they said, okay, we will allow small businesses to have a deduction for 20% of their small business profit. Now, there are some exceptions and phase-out rules, like if you make over a certain large amount, your deduction is lowered. But broadly, the QBI deduction of 20% of your profit, that's pretty good. Another very specific, really good deduction for small business is the 100% bonus depreciation. So whatever you bought last year, normally when you buy big items with an asset life greater than a year, you have to capitalize and take that as a deduction pro rata over a number of years. Like, for example, if you bought a piece of machinery and it was 5 years and it cost you $20,000, you could only deduct so much over 5 years.
Okay.
But now, if you bought something that was $10,000, $20,000, you could deduct it all.
And finally, this next tip is for anyone selling to multiple states, which is literally anyone that has an online business. This will mess you up if you ignore it. So the question is this: who do you have to pay taxes to? The federal government, the state that you are in and operating your business out of, or every single state that you sell to according to each state's individual rules? Yeah, kind of loaded question, but what's the answer?
Okay, let me back up. There's 3 buckets you're going to have as an e-commerce business, right?
Mm-hmm.
You're going to have your federal income tax, and that's the tax that you're going to be paying to the federal government for the taxes from the profits your business made. Then you're going to have state income taxes, which will be what you're paid, the state that you're in, from the profit your business has made. Now, then you're going to have a third bucket, which is huge this year because it was just like history-making legislation in the tax area.
Right.
You're going to have a third bucket, state tax, state sales tax. And that is when someone buys something from you online, you have to collect the state tax and remit it to the state taxing authorities. Because what happened this year was it says, okay, we don't care if you're physically here or not. We don't care if you have a brick and mortar physical location in our state. The fact is that you are conducting business in our state, via the web, and we want a piece of that. So, collect our state tax and remit that to us every year. And so you have to look at your state Department of Revenue. And I would also look at, where your sales are. I would look at actually all the states that you have had sales in and kind of, get familiar with those rules to see when that state tax is due. And they may have an exemption. Like, I know I'm originally from Wisconsin. There's an exemption there. Like, if you have under this many transactions or under this dollar amount,
right,
you don't have to collect the state sales tax. That may be the situation in some of the states you're operating in.
Now, if you just said all of them, you just scored 10 points.
Woo! Can I get a 10? Yeah.
10 points. All right. Thank you, Sonio. Now, if you thought that personally monitoring the changes in taxes for all 50 states was going to be an easy, it's not. It really isn't, because they are constantly changing. So there is a ton of software out there that handles automatically updating the tax rate on your website for purchases in every single state, pretty much in real time. We use a software called Avalara for my business, and it kind of makes what could be this huge administrative burden into something you don't even need to worry about. Is it cheap? Absolutely not. Do you need it? Yes. The tax man will be a-coming, and you don't want that. So pay up. Bonus round, because I know a lot of you are in the very early stages of entrepreneurship, some still on the fence. So when you first start out in business, you have the option of forming a legal entity like an LLC or C Corp, or you can just collect your payments through PayPal or whatever payment processor and call it a day, in which case you'd automatically be considered a sole proprietorship. So what is the benefit of doing all that paperwork to make your business legit And how does this affect your taxes? If you said certain business structures protect your personal assets, you get 5 points. And if you added that you gonna pay taxes on everything you make regardless because the tax man do not play, you get the other 5 points.
Anybody came to you and sued you for whatever, they only can go after your business and whatever money you've invested in the business as an LLC, versus if you're just a sole proprietor, then now they can go after any and everything, including like your home and your car. That's the only difference between the independent contractor and the LLC is the statute protection, right? As far from an income tax perspective, it's exactly the same. The money that you earn is going to flow right through your Schedule C to your Form 1040, and you're going to be taxed on it, on the profits of your business, as well as self-employment tax. Those are exactly the same.
So either way, the tax man needs his cut. So even if you don't want to have an official business entity, you are opening yourself up to a lot of liability. Quick story, we had a store in a not great part of LA that got held up in like the first couple months of it opening. Yeah, like held up. If anything would have happened, if we were operating as a sole proprietorship, I would have been sued personally for all medical expenses and more, and they could have taken my house if I owned one, car, and probably I would have had to file bankruptcy or something. Versus operating as a corporation or as a corporate structure that shields me from any liability, in which case they would have been able to sue the business, probably taken every penny, but I would keep my house that I don't own a house. I don't own a house. But that is the point that I'm trying to make. And you're probably thinking, I'm just trying to sell sweaters or cookies, not open up shop in the hood. Well, remember Jaclyn Hill and her hairy makeup?
Is that like growing something? Is that like a clear butter? See, dude, I'm sorry, but you can't make up.
Ew, gross. If you don't know, YouTube beauty guru Jaclyn Hill launched a makeup line, and that's what she sent out to people to put on their lips. Some people say they were getting sick. Other people say the particles cut their lips. Did she plan on that? No. But stuff happens in business. Like, stuff just happens. And her customers didn't understand why she never came out and apologized. It's because that admission of guilt would have meant everybody could have sued her out of existence. So, protect yourself out in these streets and pay your taxes. And another thank you to Kanisha Coleman of Coleman Tax. You can contact her at colemantaxllc.com. That bonus question was worth 10 points. So that's 52 points? I have an accountant, so y'all stop judging. But drop your score in the comments section. Let me know if we made taxes fine. Is that possible? Did we do it? And did I earn a subscribe? Did I earn a freaking subscribe? Just like hit subscribe, because building this channel to 1 million subs is my only focus, my team's only focus for 2020. Why? Because representation matters, and there isn't a single business channel led by a woman with more than 1 million subscribers, even though there are dozens, if not hundreds, of guys operating at that level, which is mind-boggling to me. So we're here to change that. If you like what we're bringing to the table, go ahead and hit like so the algorithm shows this to more people, and be sure to hit subscribe so you can help us on this journey to 1 million. See you guys in the next video.